Hi students, Seema. In the previous class I have discussed regarding the income from house property, long questions, important questions I have discussed. Two questions I have discussed over there. Okay, so once you see the another question here, following are the particulars supplied by Mr. Chandra, compute income from house property he has given. So here two houses he has given, house 1 and house 2. So once you see house 1 is let out, actual rent, nothing but rent is receiving. So what we have to understand here, it is a let out, and house 2 is self occupied. Okay, so here we have to calculate GAV for house 1, and house 2 is self occupied now, so NAV itself it will be nil, so no need to calculate GAV in case of house 2. Okay, so now you see, first of all, once you see house 1, observe the house 1 here. MRV has given, FRV has given, standard rent, actual rent, date of construction, interest on loan, pre-construction interest, education cess, annual charges, fire insurance premium, ground rent, collection charges. These all three things he has given in the question. So here first of all, there is no vacancy, there is no unrealized rent. So what we have to do, it is a situation 1. Situation 1, and next what we have to observe, standard rent is there. So situation 1, standard rent is there means we have to apply the rules, Rent Control Act applicable. So Rent Control Act applicable rules. Okay, we have to apply the Rent Control Act applicable rules. Okay, so first of all what we have to do here means, so first here we have to calculate the GAV. Okay, already in house property topics, in previous topics, same topic we have discussed. Okay, so first of all what we have to do, we have to calculate GAV. Okay, Rent Control Act applicable, situation 1. So for calculating GAV, what is required here, once you see MRV and FRV. So MRV is how much, 80,000, and FRV how much he has given in the question, 90,000. So the higher value will be the GAV. Next what we have to do, we have to calculate the adjusted ERV. For calculating adjusted ERV, we have here, how much we got here, 90,000, and standard rent how much he has given in the question, 1 lakh. So the least value will be adjusted ERV. Next step we have to calculate ARV. So ARV is how much here, once you see, ARV is 1,20,000. ARV is how much, 1,20,000. Okay, so directly has done here. Next step 3, GAV. Okay, for calculating GAV, the higher value we have to select adjusted ARV and ARV. So the higher value will be the GAV. So 1,20,000 is GAV. Okay, so here we got the GAV now. After getting GAV, next what we have to do, we have to go to the problem. So first of all here, house 1 let out, GAV 1,20,000. So in the question, education cess he has given, municipal taxes is not there, education cess we have to deduct from the GAV. Okay, remember it, education cess we have to deduct from the GAV. After even municipal taxes also we have to deduct, and education cess also we have to deduct. So 1,16,000 we got. Next, deductions under section 24, standard deduction, 1,16,000 into 30%, so 34,800. Next, interest on loan. So interest on loan, here we have taken 10,000 only. Why we have not taken pre-construction interest, Seema? It is in 99. It is 99, so more than 5 years. If it is for more than 5 years, we should not consider pre-construction interest. Listen carefully. Here the date of construction is 1699. Okay, we are calculating for the assessment year 2021, so it is more than 5 years. It should be less than 5 years. If it is more than 5 years, we should not consider. We should not consider pre-construction. We should not take the pre-construction interest, nothing but they won't allow a deduction. Clear? So here 10,000 only interest on loan, current year interest on loan only they have taken. So 34,800 plus 10,000, so 44,800, so 71,200. This is for in case of house 1 we got the income from house property. Next, house 2 you see. So house 2 is self occupied na. In case of self occupied, no need to calculate the GAV or GAV. Okay, directly NAV itself is nil. So here, but once you see the interest on loan, 1/9/2014 he has given. 1/9/2014 he has given. So only interest on loan and pre-construction interest we have to take in case of self-occupied. So GAV nil, municipal taxes nil, NAV is nil, standard deduction is also nil. Only interest on loan under section 24B, 12,000, that is current year interest, and pre-construction interest. In case of pre-construction interest, already I have said we should divide it into 5 equal installments. Okay, so 30,000 divided by 5 you have to do. You will be getting 6,000. Okay, 12,000 plus 6,000 is 18,000. And in case of self-occupied, regarding interest I have explained to you, ma. So regarding interest, the least of the following two amounts you have to take. List of the following two amounts. Okay, once you go through this, go through those interest calculations, interest rules in case of self-occupied. Okay, so here finally it is a least value. It is a least value. So 18,000 is loss from house property. So here next what we have to do, we have to calculate total income from house property. So from house 1 how much we got here? 71,200 income, and from house 2 18,000 is 18,000 is loss. So final income from house property is how much, ma? Here 53,200. Same this question also. See, MRV, FRV, house 1 he has given and house 2 he has given. So house 1 is let out and house 2 is self-occupied. Own residence he has said self-occupied it is. Okay. So here municipal taxes you have to deduct. Sewerage taxes also you have to deduct, ma, from GAV. Okay, in case of house 1. See, municipal taxes you have to deduct and sewerage taxes also you have to deduct. Clear? So same like previous question. So here also we don't have any vacancy or unrealized rent. Situation 1, rent control act applicable. Why? Because standard rent is there, na? So rent control act applicable. Clear? So you have to apply. And in case of here we don't have even a pre-construction interest also, only interest on loan he has given, so directly we have to take it. Okay, so first you need, for house 1 you see, ma, first you need to calculate ERV, afterwards you need to calculate adjusted ERV, afterwards ARV means rent received 80,000 directly he has given, afterwards GAV. Okay, finally you have to calculate GAV. After calculating GAV, what you have to do? You have to do the problem. Okay, from you will be getting NAV. After NAV, next what you have to do? Okay, you will be getting GAV, na? See here, GAV you should get 80,000. From that deduct municipal taxes. What he has said, 10% on municipal value you have to do. On municipal value 10% you have to calculate, and even minus sewerage tax also. So afterwards you will be getting NAV. Next standard deduction, next interest on loan. And okay, next afterwards self-occupied. So in case of self-occupied, what I have said, ma, NAV itself is nil. Only interest on loan we have to take. Okay, practice these two questions. Nothing but the questions which I am discussing here, those questions are given in previous papers, ma. So once you go through these all questions, okay, na.